the rest of this week. We're starting off here inside of DXY, and you can see here with the euro and the dollar that they are retesting their extension long levels. And so this is what has fueled a rally, at least in the Russell, and it's attempting to create a rally inside of the indices as the dollar weakens back down into its low of the week. Think about that for a moment, that the dollar strength trade helped contribute to this massive 200-point sell-off on the indices yesterday. And the dollar is returning back down to its lows of the week. That would be like the indices returning back to their highs up to their highs of the week. So that's a pretty big deal, especially for these deep negative correlations that are 0.8s and 0.9s. So in US dollar terms, there's a huge beach ball underwater moment here for the indices. Now, if the dollar were to fall into these support levels and start to lift off, would that contribute to the indices rolling over? If we've gotten all the way through this pullback on the dollar and it starts to strengthen, the indices have not had a bounce. I mean, that is an incredibly bearish market, and pretty amazing actually from the perspective of ignoring the dollar's weakness, but only moving down on dollar strength. Let's move on here to our bank chart. And bank is essentially completing a profit target to a traditional that we had been inside of yesterday. There would be absolutely nothing unusual about us squeezing up into our highs of the week to lows of the week. And there's actually a counter trend that was defending here as we were coming out of our 1130, the beginning of the daily doldrums. And so even bank has a little bit of room to squeeze up into resistance. When we're thinking about the VIX sold off from its daily short setup. And as we are going into our 1030 time frame, our 930 time frame, the VIX has gone straight down here from the beginning of the day. The indices made new lows. So all of our leading indicators right now would tell us that this is an incredibly dangerous time to be chasing shorts on the indices. That's what it would tell us. Now, there is room for the VIX to make this pull back into support, and we were inside of a short setup coming out of the 1030 time frame, and then that target was hit. And we were front run inside of the next traditional in that VIX weakness event here is up to 2531. It was front run at the 15s. And if the VIX falls into this support and we say we get a reaction to its halfway back long for the week, well, that is another moment when the indices could roll over inside of their resistance. Let's do a little experiment here. We're looking at the VIX from the perspective of its 38.2% line from our lows of the week to highs of the week. So this is our low down here. What's the support? You could make a case it's an old target, short target. It's the VIX's 38.2% line from its Tuesday's lows to highs. Where are we in relation to the indices in relation to that 38.2% line on the ES, YM, NQ, and the Russell? And let's just take a look. So that would be right here, 38. Just using this stream continues at emoneyaddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.